In my last video, I spoke about filing annual returns every year if you're a firm that is registered as either a business name or as a company. And there's so many people speaking about them not knowing that they need to do that. However, I mentioned in that video that filing annual returns is entirely different from paying tax. So it brings me to the question which I'm going to tackle in this video. Should firm pay tax? And the simple answer is yes and no. Firms are supposed to pay tax if you are registered as a business. And even if you don't meet up to the threshold of paying tax, you are supposed to file for tax every year. If you are a firm registered as a company, duly registered with the Corporate Affairs Commission, apart from filing for annual returns, you are supposed to meet up with the Federal Inland Revenue Service, which is the body responsible for tax in Nigeria. And what are the tax that you're supposed to pay? We have the company income tax, we have the value added tax, and we have the withholding tax and every other tax that you might think of. I'm going to focus on company income tax in this video. So if you are doing business in Nigeria, I'm using Nigeria because that is the country in which we are going to focus on. Every other country has the bodies responsible for the tax in their country. For example, we have the Ghanaian Revenue Authority responsible for the tax and every other thing in Ghana. IRS for the US and other countries, like I said, has their own tax body and their corporate body responsible for revenue and tax in their respective zone. Now, Nigeria, the moment you are registered as a company, you have to register with FIRS and collect a tax identification number in which you will be able to track all that you are doing in regards to filing tax. Let's talk about company income tax. So what are the laws that guides paying tax? According to the new tax law of 2024, if you make between 0 to 25 million in a year in gross revenue or sales or turnover, whichever works for you, you are going to pay zero tax. Which means if you did not sell at all for 1 year, or you sold and your total sales, or whether income from sales of birds, sales of fish, sales of crops, sales of vegetable, gold, pig, whatever consultation did not amount up to 25 million in a year, you are going to pay zero tax. But if your income within 1 year is between 25 million and 100 million, you are going to pay 20% of that amount. And if your income for the business 100 million above, you are going to pay 30% of that amount. Note, the percentage that I'm talking about is based on gross revenue. Like I said, it is not based on profits. It is based on sales, based on income, excluding when you have deducted your other expenses. And that is why it is important to keep records so that you know what comes in. Even if you make 25 million in sales and your expenses is 24 million, you are going to pay 20% of 25 million as revenue. However, even if you don't make up to that amount, or you did not do any business at all for 1 year, you are supposed to file for tax. This is where tax filing comes in. You are going to file that I did not do business, or I did business, but I did not meet the threshold where I'm supposed to pay tax, and you are going to file new. And that is why every business registered in Nigeria should have a tax identification number and register with the FIRS Pro Max. That is where you are going to monitor everything regarding tax in your business. So whether you are an agricultural firm or whatever firm that you think you are in or registered, yes, you are supposed to pay tax, and yes, you are supposed to file for tax. If you don't meet up to the threshold, you will not pay tax, but you have to file. That is why it is important to keep your books in place. Record all expenses, record all income, record all transactions related to the business for 1 year, so that when you take your books for audit, you are going to be compliant. And even if you are going to be filing, reach out to an accountant to handle the books for your firm, because farming has gone beyond an hobby, but it is now a business, especially for people who registered their farm as a company or as a business. To recap, as a farm registered as a company, you are supposed to file for tax even if you don't meet up to the threshold. Look at the threshold for paying tax. 25 million to 100 million, that's paying 20% of your gross revenue. 100 million above, you are paying 30% of your gross revenue or gross turnover. And if you don't make up to 25 million or you don't do any business at all, you will still pay. If all of this that I've just said still looks confusing to you, you can reach out to an accountant that you're comfortable with, or you reach out to us at Agricfy Farms Limited. We have a team of accountants that deals with this part of the business to make it easy for you, especially if you are in the agricultural space and you see that you are tax compliant in your country so that you will not have any issue at all. My name is Daniel from Agricfy Farms Limited. See you in another video.